All right, folks, it's Friday. We're rocking floral. You already know the vibes. We're going to get some work in here before we take off for the weekend. Appreciate all of you guys for tuning in. If you missed the session last night, we were talking about XDC pumping hard. That's right. Another one of our utility tokens been suppressed, finally set free, and now we're running, and we absolutely love to see it. Now, at the time of this recording, just past 8 a.m. on the West Coast, 29,200 for Bitcoin, 1844 for Ethereum, and XRP still at 66 cents. We're watching it closely. We did get the job numbers. We're going to go over that, but before we do, we're taking a look here at the XDC chart. Went up to about 9.5 cents yesterday, back below 8 cents currently, and a little bit of a correction to be expected. But XDC has just absolutely ripped over the past month. XRP setting it off, XLM following, and XDC coming along for the ride too. You absolutely love to see it. Now, I wanted to start out with this message from Kim.com. He says, it's easy to blame Americans for all the suffering that the U.S. government has overshadowed the world with. But Americans are victims of a well-orchestrated manipulation machine from Hollywood to the media. It's not easy to see evil when it presents itself as good on all channels 24/7. And as an American, I ask that you please, begging for forgiveness from the rest of the world and the harm that we have done and the abuse of the reserve currency status. And we are fighting like heck to try to save our country. But we do have a manipulation machine running 24/7, and it comes in even with the economic data. You bet, from Zero Hedge. Every monthly payrolls number in 2023 has been revised lower to manipulate perception in markets. And perception is reality, and everybody should be having a good time and enjoying such a strong economy is what they tell us. But when we go back and we look, this is manipulated data, and they have been revised lower every single month this year. Now, we're going to scroll on over here. This is a Bloomberg report here from Fed's Bostic. Says labor market is slowing and there's no need to hike more. Restrictiveness grows as inflation to rates gap widens. Atlanta Fed president speaks in Bloomberg TV interview. So this is our Federal Reserve Bank of Atlanta president, Raphael Bostic, said U.S. employment gains are slowing in an orderly manner and there is no need to hike rates further to ease inflation. Quote, I expect the economy to slow down in a fairly orderly way. I love that. Let me comment real quick. It's, we're talking about a soft landing. This is an orderly way. Well, what does that mean? It means folks having to take a second and third job to feed their family. It means folks losing their jobs, having to sell their homes, having to sell off their assets. It means their 401k getting slashed 10, 20%. But as Fed president, we get to come up here and do our little dance and say it's still a good time. This is what we're hoping for, a soft landing, And to me, this just shows you how out of touch they are or how little they care about what's taking place in Main Street, as long as they can tout that this is, they're expected, continuing that pace. They just want to continue at the pace, even though what does that mean on the street? Closing your door on your business, turning the key, having to sell off your assets. This is a struggle for the average American right now. And they say this is a slowdown in a fairly orderly way. It's terrible. Now, he says, I'm not expecting this to be over in a short period of time. So great, we get pain for longer. Bostic spoke after a U.S. Bureau of Labor Statistics report showed that employment increased at a solid pace in July, though the gain of 187,000 last month represented a significant slowing from earlier in the year. That some economists said indicated the economy could be on track for a soft landing. The central bank has been seeking to reduce growth to below its long-term trend to reduce an inflation rate that has been elevated, i.e., they are rug pulling the U.S. economy and they don't care if Main Street gets sacrificed. They do not care about the middle class and poor so long as they can rein in and fight that fight against inflation and keep the dollar propped up. Now, the labor force participation rate remains unchanged since March. The job market can't get any hotter than it is now at 62.6% employed. This is full employment. So when you look at this data point, we have remained at this level, about 62%, back all the way since, February, March. So since March, we have been at this labor force participation rate. So you really got to look through these manipulated data that we call the CPI lie, all the economic data. It's all lies. They put it out, revise it lower every single month this year. So, it's like them telling us that inflation is going to be transitory. Now we're going to have a soft landing. This is an orderly pace. And what does it mean? It means that we get wiped out. It means that they kill us, metaphorically speaking. Now, when you want to see how the level of the extent of our corruption in our government goes, apparently the U.S. Energy Secretary secretly consulted top CCP energy official before Strategic Petroleum Reserve releases. This is according to Fox, waiting for this to be confirmed by further sources. But does it surprise any of us at this point? This is a government, and manipulation that's been going on here with our three-letter agencies, the SEC, approving the IPOs of all these Chinese companies, approving and consulting with the top CCP energy official before we dump our Strategic Petroleum Reserve, which now we can't fill back up. And we're not going to be able to fill it back up for a while unless we are willing to pay a much higher price. Saudi Arabia to extend voluntary production cuts of 1 million barrels per day through September. Just yesterday, the U.S. announced that refilling the Strategic Petroleum Reserves would be delayed. The delay was due to unfavorable market conditions. Is this just another coincidence? Absolutely not. The SPR now holds 346 million barrels of crude oil, its lowest level since 1983. Over 250 million barrels have been withdrawn over the last 2 years. As oil prices rise above 80, the U.S. is in a difficult spot. Now recall, we've been covering this. They're trying to fill back up their Strategic Petroleum Reserves at $67 to $70 per barrel. We're now well above 80. Saudi Arabia is going to continue the production cuts, and OPEC has control of this market along with Russia. They're working together to keep this market inflated and propped up, because it's, damaging to the United States. But apparently that's the plan, and we consulted with top CCP energy officials before we dumped our Strategic Petroleum Reserve, which is supposed to be saved for wartime efforts. So that's good. And I wonder if we consulted anybody from the CCP about this situation here, where the Chinese yuan has surpassed the US dollar in China's cross-border payments for the first time in history, according to banking giant Goldman Sachs. So, believe it or not, in China, the US dollar was still doing most of the cross-border payments. Now the Chinese yuan has passed, and this is only going to accelerate with the growth and adoption of their digital yuan. Now, we know that the settlements on the digital yuan have been, above 14 billion, pushing upwards of about 20 billion. And what's interesting to note is that RippleNet transaction volume has been about 30 billion since its inception. So Ripple on-demand liquidity and RippleNet payments combined tallying just above 30 billion now, and you're seeing that the Chinese yuan settlements closely behind. But we've now surpassed the Chinese yuan the Chinese yuan has surpassed the US dollar for cross-border payments in China. Very interesting to note. Now, when we move into the cryptocurrency update, folks, this is the type of manipulation and the stablecoin movement that we're watching closely behind the scenes. Now, Brian Armstrong revealed Binance sold all of its USDC in Coinbase earnings call. So apparently in his earnings call, he slipped this one in, unexpectedly said that the USDC was stronger now that Binance has been liquidated. And here's the quote right here. USDC market cap is up after Binance pulled out. Armstrong stuttered out during Coinbase's earnings call. The unexpected answer seemed to imply that crypto exchange Binance was a holder of Circle and that USDC is safer now that Binance no longer holds the stablecoin. Coinbase is a member of the consortium that owns USDC. It's the preferred stablecoin for the exchange's operations. However, USDC's market cap is shrinking fast, dropping from 44.5 billion at the start of this year to just 26 billion at press time. Earlier this year, the FDIC agency had to take over Circle's main banks, namely Signature and Silicon Valley Bank, to prevent a bank run. This controversial move effectively saved USDC. So what's interesting, and this is something that I've noted about USDC and Circle, is that they're backing the coin with treasury holdings and cash, which is good until we have the banking crisis, until we have the worst bond year in history in the United States last year, which is exactly what happened. And then these banks started to fold, and the exposure to, Silicon Valley Bank and Signature Bank obviously impacted much of the cryptocurrency space, but effectively USDC got bailed out. Now, what we're watching, though, is Tether is being used to manipulate the markets along with other stablecoins, and they're using Tether to flow in and then flow out into other stablecoins. We're seeing big transactions. We covered it last night. What was it? 500 million or $500,000 swaths of Tether into DAI last night is what we were watching. So we're seeing it. The stablecoin manipulation is still very present, but apparently Binance is out of USDC. Is that good for the markets? Yes, probably, because Binance is in trouble. They're being alleged of committing fraud. They've already been sued by the SEC, and that exchange is going to have to go through the gauntlet here, and we'll see if they survive or not. Coinbase and USDC are buddies with our government, so it is no surprise that they get bailed out. And the thing with Circle and USDC is I think that they've been trying to do things the proper way, and they still don't have stablecoin regulations and rules to abide by. So they're doing everything they can to stay within compliance with the rules that we got on the books as it stands now. Now, in terms of Coinbase and their fight against the SEC, as I titled this episode, Ripple case is now helping the Ripple case is now helping Coinbase to slam the SEC in this most recent filing that was just made here today. What we're looking at, excuse me, let me take a sip of coffee here, folks. Okay, so what we're looking at here right now is that Coinbase filed the brief asking the court to dismiss the SEC's case against them. But they cite the most recent Ripple ruling. DAI shares this: if the judge dismisses the Coinbase case partially over the Ripple ruling, it would be a death blow to Gary's crypto crusade. Now, it says right here, in Ripple, the institutional sales that the court found qualified as investment contracts were made, quote, pursuant to written contracts for future delivery. 2023, and citing this case. In this case, by contrast, the SEC has charged Coinbase based solely on blind bid-ask spot exchange transactions. The very sort of transactions the Ripple court recently held as a matter of law were not investment contracts because the undisputed facts showed no relevant relationships between the parties to the sale. So, while declining to reach whether a contractual undertaking is required to establish an investment contract in all cases, concluding that the absence of any promises or offers in context of blind bid-ask transactions on secondary exchanges precluded finding of an investment contract. So they are using the Ripple case in their defense here. Paul Grewal, chief legal officer from Coinbase, says that they filed our brief asking the court to dismiss the SEC's case against us. Our core argument is simple. We do not offer investment contracts, as that term has been construed by decades of Supreme Court and other binding precedent. By ignoring that precedent, the SEC has violated due process, abused its discretion, and abandoned its own earlier interpretations of the securities laws. By ignoring that precedent, the SEC has trampled the strict boundaries on its basic authority set by Congress. We appreciate the court's careful consideration. Now, this is going to be very interesting to watch, and as DAI described it, this could be a death blow to Gary Gensler and the SEC if Coinbase is able to claim this defense and win this victory. So we're going to get to see this ruling here, how the judge responds to Coinbase's effort to get this case dismissed, basically on the groundings that the SEC has no case here. There are no investment contracts, and this is what we found. This is the law of the land, especially with XRP, is that in and of itself is not a security. There is no investment contract. There is no common enterprise. The expectation of profit may be there, but it's not inherently there, right? And so this is where much of these lawsuits that the SEC is going to be trying to push on with, they're going to struggle going after these cases like this, where they're just trying to blanketly say that you're selling securities across the board. That's not the case anymore. Now we know that the tokens in and of themselves are most likely not a security unless their function, meets the prongs of the Howey test and creates some sort of investment contract or scheme in and of itself. But this is going to be interesting to watch where this case goes. The Ripple case truly was the order that we just got from Judge Torres. I pulled it out last. I guess I put it back in my red folder. The 34-page order that we got from Judge Torres was a historical ruling that has set the precedent for the rest of the space, and everyone should be thanking Ripple and the team for the fight that they did. And now you got folks like Coinbase who are going to use that to their defense. I think it's going to help them big time. Now, further good news for adoption and growth of XRP. Chicago-based firm with over 4,500 ATMs adds support for XRP. CoinFlip lists XRP on its order desk, empowering investors with personalized support and leveraging recent XRP ruling and market surge. You absolutely love to see it. Now, we are moving along quickly here, folks. Digital Dollar has announced the completion of its retail CBDC pilot. The report discusses the benefits considerations of a U.S. digital dollar to enable cross-border payments using DLT. R3 shining the light on that one. Love to see it. And this is the post here that they made. Digital Dollar Project launches retail CBDC pilot with Western Union focused on cross-border payments. Now, what's funny about this is the fact that Western Union is one of the main companies that is benefiting from the friction in cross-border payments, right? But now they are working and partnering up here and working on this Digital Dollar project. This came out of Washington just yesterday. Okay. Now, this is the completion of a pilot study conducted in collaboration with the Western Union Company, BDO Unibank in the Philippines, and support from Accenture, which is a Ripple partner, of course. Everywhere you go, every corner you look around, you find Ripple in there as well, or a Ripple partner, I should say. And so this just reiterates the point, folks, that we are here. This is moving. This is accelerating rapidly. And we've invested in assets that have tremendous amount of utility. Now we have clarity. Now we get to start building. What an exciting time to be in the cryptocurrency space and understanding where the real value is going to be built and stored. For me, it's sad to see that the manipulation is still running. We still have all the manipulation fraud within the stable coins, flipping back and forth and doing that dance. We still have the DC dance that we got to fight through. We have Coinbase fighting the fight against the SEC. We are still fighting a 3-letter agency by the name of the SEC and good guy Gary Gensler, who is trying to stifle this innovation while they partner up and pilot projects with the incumbents that have literally been scalping our hard-earned money off of us for all of these cross-border payments. They are one of the primary beneficiaries of the friction that has been in our cross-border payment system as of this current financial system. But what did they do? They tried to stop XRP. They tried to stop Ripple. They couldn't. Now we're set free, and what an amazing time to be alive, folks. I appreciate all of you guys for tuning in on this Friday section. We will have some more content dropping today, so make sure you subscribe, hit that notification bell, and on the way out, please do me a big favor and smash it. God bless all of you. It's at my website, ZachRector.com. We'll see ya.